What is going on with the oil price? We've seen a lot of volatility over the last week and a half, and it's been a pretty busy 12 months or so for oil. If we have a quick look on the charts, if we look at the last 12 months, the price has been pretty much in decline, particularly starting from June of last year. If we take things out and have a look at the last few years, we can see that the price just this month has traded down to its worst levels since the end of 2021. And then if we zoom in on what's been going on over more recently, we can see that even though the price had hit that multi-year low, we've seen quite a strong bounce back by oil just over the last week and a half. So I thought, let's take a look at it in a bit more detail, talk about what's driving it at the moment, have a look at some of the recent news, then jump back on the charts and actually set a trade up this time round, because I think there are arguments for being long or short oil at the moment, depending on your time frame. But when we jump on the charts, we'll go through it in a bit more detail. Before we get into it, just a quick reminder: I launched a newsletter a couple of months ago now. It comes out every Saturday. It's free of charge to sign up for it. If you go to my website, jonesthemarkets.com, and if you scroll to the bottom, there's a box there to put your email address in. You can also find out more details about the trading course that I run on there. It actually incorporates two courses, a medium-term course and a short-term course. You can see some of the performance, some of the results. Any questions, drop me an email. But to sign up for that newsletter, go to the website, and as long as your name's in by the end of the week, you'll start receiving it from Saturday morning. Right, let's talk about oil. So we've seen the price slide now since June of last year. So since June 2022, the price has been in decline. We had that move out of the sideways range in the last couple of weeks, and the West Texas Crude hit its lowest levels since December 2021. But since then, we've seen quite the turnaround. It traded down to about $64 a barrel, just out of 64. But we've seen the price at the time of recording bounce back by almost 15% in little more than a week. That is a big move for a major commodity like oil. So what's helped the bounce back? There's been a couple of things. We know in financial markets over the last couple of weeks, investors and traders have been worried about the banking sector. With we saw Silicon Valley Bank in the news a couple of weeks ago. We saw Credit Suisse getting taken over. So there was worries about what further stress in the banking sector could have on the economy. Anything that concerns the economy typically puts pressure on things like oil. So I think as those worries have eased, that's helped the price of oil get lifted as well. And there's also been a halt to some oil exports from Iraq. And I think when we've seen, this is a bit of a supply-demand balance here, when there's a concern about perhaps some parts of supply, that's something else that helps lift the price. So there's been a couple of things that has helped lift the price higher. But where it is now, where we've been this year, the strength we've seen over the last couple of weeks, is this oil turning around, or is it just another blip before the market sells off? Some analysts are still expecting a good year for oil, expecting rising demand from China, which I think is expected to hit or equal a record this year, to be one of the main driver of oil prices as the year goes on, as the Chinese economy continues to grow. We're expecting strong demand there. But is that going to be enough to change this trend for oil? For me, that trend since June is still down. Let's see. As I say, there's a couple of trading ideas. I'm going to place a trade now when we have a look at this market. So let's jump in and take a look at the charts in a bit more detail. So let's take a look at this oil in a bit more detail. So we had the move up, obviously, on the Russian invasion of Ukraine. The market tried to rally back up to them last summer, failed. And we've been in this trend since. I'll pick up on a bit of the trend since about here, August last year. Let's step it in. So let's say our trend line looks something like that. So just in the last week or so, we have seen West Texas Crude, obviously this is, trade as low as $64.20. And that's the lowest. If we take the chart out, we've got to go back to this spike low in December 2021. Back then, the price traded down to 62.77. So we've hit a 15-month low on oil. And undoubtedly, the trend is still down. Let's stick with the daily chart for now. We had it in this sideways range for a while. $83, $84 at the top end. And then on the downside, $70 was holding the price up. Then we had this sell-off. That's when the price moved through and hit this 15-month low. But I suppose what's interesting is the fact it snapped back quite quickly. So there are absolutely, I think, two trades here, potentially. One idea is to wait to see, does this market run a little bit higher? Do we get a push back up to maybe near the top of the recent range, perhaps up to, where's the trend line? The trend line's coming in around 78. We've got highs in at 81 and 82. So do we get the market push a bit higher and then start to roll over again? That could be an interesting short selling opportunity. The other short selling opportunity, if you took the view, well, the market's bounced back from this oversold position, but it's going to break down again. So an aggressive short will be using the strength of the last week as an idea to go short. When it comes to your stop loss, where would your stop go? I mean, for me, I'd probably still be looking at above 77 somewhere. And then perhaps the counter trend view, which we'll look at in a second on the short-term chart, is to look to be a buyer and see if we've got a bit more momentum left in this bounce back. If we take a look at the RSI, we've got a 10-day RSI in it. We're not getting much from the RSI at the moment. It's pretty much in the middle. It's around 50%. We did have it go oversold on the way down, stayed oversold for about a week before the market turned around. It's the most oversold we'd seen oil. Let's step this back. We'd have to go all the way back to those December lows from 2021. That's the most oversold on a 10-day RSI we've seen oil. So absolutely, the big trend is still down. We've hit a 15-month low in the last week and a half, so that we still have lower highs, lower lows. So looking to sell short, completely the textbook approach. It's just whether you wait to see, does the market blip a bit higher and you get a better short, or do you go short now and think the market's overreacted, the market's bounced back too far? But perhaps the more aggressive one, let's take a look on the hourlies, is to look at this trend since that low. Let's pick up on a trend line. So the trend since that low looks like this. We haven't got three touches yet on the trend line, so it's arguably not a valid trend line, but not yet anyway. But we have had a strong bounce back. So if we were looking at it from a short-term point of view, perhaps we could use some weakness as an opportunity to buy into this short-term trend. Looking at it at the moment, we're seeing the market trading around just below $73 a barrel at the moment. We do have on the RSI, we have this thing called divergence, bearish divergence, where the market's pushed to a high, then pushed higher again, but we've got lower highs on the RSI. So that can be a suggestion that perhaps it's a bit vulnerable to running out of steam up here in the short term at least. But for me, I'm going to set a trade up on this. And what I'm going to do, I'm going to set up a trade to try and buy a dip on the hourly chart. So the first consideration for me, well, where's my stop going to go? So the lows from the previous day are in around $69. We've got trend line support coming in around 68.20. So for me, if I'm thinking about a stop, I probably want it at least the other side of $69. If I want it a bit wider, I might go the other side of Friday's low. That's down at 66.68. What I might do, I'm going to split the difference. I'll put a stop around $68. That's what I'm going to think about doing. And what I want to do, I want to be a buyer of a dip. If the market weakens from here, I'd like to be a buyer. Let's say we see the market sell off back towards the old support. I'm going to leave an order to buy at $70.50. That's my plan for this trade. Let's jump on the trading platform and set up that trade. So here's the hourly chart on my trading platform. And I did a video just last week. If you go to my website, jonesthemarkets.com, I'll put the link actually in the description of this video. And if you choose broker, I did a short video, 10-minute video about why I've decided to trade with this broker. So if you go there, you can find out more about it and you can click to try them out for yourself. But as I say, I'll put the link to this in the description. So what I want to do, I want to buy the dip. So I'm going to leave an order in to buy at, let's say, 70.50. The levels are slightly different with this broker. You'll often find that if you're looking at a third-party charting package and then you look at your own broker, sometimes you'll have slightly different levels. So what I'm going to do, I'll be a buyer at, let's say 70.60, and I'm going to put a stop down at $68. Let's set that trade up. So I'm going to choose order. So I'm going to put my order price in. So I'm going to be a buyer at 70.60. I'm going to put my stop loss in at 6,800. That's what I said, isn't it? I want to risk a couple of £100 on this trade at the moment. If I get stopped out, my risk of loss is going to be 197.60. So let's just bump the size up to 0.77. And that's it. I'm ready to go. So that order will just sit there now at 70.60. If the market sells off, I'll get filled and I've got a stop loss attached. Let's send the order through. And you can see it here on the chart. So there's my buy limit at 70.60. If the market sells off to where it was, only where it was this time yesterday, at the time of recording the video, and if that order gets filled, my stop goes in there at 68. Let's see how it turns out. Like I say, to find out more about the broker and why I trade with them, go to the website and have a look on that broker page. And I think that's an interesting trade. It is absolutely going against the big trend. So the big trend on the daily chart is still down. But I wonder, are we going to get a bit of a run higher for oil from here? Let's see what happens. And if it does run back up to the high 70s, I think there's a reasonable chance this market's going to roll over again. You know, for me, until and if oil breaks $84 a barrel, West Texas Crude, that trend is still down. So it's been a really interesting couple of weeks in oil. We'll take a look at it again on the live stream on Friday. So make sure you're subscribed with the notification thing pushed for that. But perhaps in the short term, this oversold bounce has got a bit further to go. Let's see. That's it for this update in oil. It'll be interesting to see if that order gets filled and how it moves from there. We'll do an update in the live stream this Friday. Don't forget to find out more about the broker I use, go to my website. You can also, on the website, see more about the trading course and also sign up for that newsletter that comes out every Saturday morning. But for now, for oil, we'll leave things there. So until the next time, good luck with your trading.